Thanks for listening to today's podcast. Today we'll be covering news about the Big Four potentially being broken up and some other interesting news about a unique way that PwC is utilizing blockchain. But first, I wanted to remind you to make sure to subscribe to this podcast on iTunes or Google Play. Thanks again for listening. Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. We bring you the latest news regarding the Big Four, along with unique Big Four recruiting advice and the best Big Four career tips to help you with your Big Four career. Hope you enjoy the show. First up, we're going to talk about the Big Four potentially being broken up in Europe. There have been a lot of scandals related to the Big Four accounting firms in the past few years, which leads many people to say, how can this issue with the Big Four be addressed, as the Big Four don't appear to be regulating themselves? And many of these accounting issues might be popping up due to improvements in technology and information. But as a result of these issues, Stephen Hadrill has called for an investigation into whether the Big Four accounting firms should be broken up. And Stephen is the head of the Financial Reporting Council, which is the UK regulator of the Big Four accounting firms. And this comes after a series of scandals that have occurred related to the Big Four over the past couple of years, and the latest of which is the Karelian Scandal. And it seems that these large accounting firms should be experts in accounting and understanding business, since they are large professional service firms. But it seems that they just care less about learning about their clients' businesses and being able to see if their clients are in financial trouble. And the FRC believes that competition might help the Big Four become more diligent in their work. Since natural competition has not been a problem for the Big Four in more than a decade, the UK is trying to induce some forced competition by potentially breaking them up. In the Karelian Scandal, KPMG was the auditor, and all of the audit firms combined made almost $100 million off of Karelian in the past year before Karelian went under. And this is obviously a huge problem when Karelian's own audit firm can't catch a problem at one of the UK's largest construction companies. But many people also see that there's no downside into an accounting firm missing an issue, because other Big Four accounting firms benefit from the downfall. And KPMG also doesn't care about losing a large audit because they know that one of their counterparts at the Big Four will likely have a scandal at their clients as well. And then they will be able to pick up an audit off of that. So it just becomes this rotation of clients that the Big Four have an understanding about because they know there's no real competition. And what makes this even worse in Europe is mandatory audit rotations. And with mandatory audit rotations, the Big Four just change large clients every few years. It's meant to increase independence and audit scrutiny, but it does little to increase competition. Will the Big Four accounting firms be broken up? Make sure to subscribe to this podcast to find out. Next, we're going to continue talking about the Karelian accounting scandal, as more news has come out about PwC's role in the downfall of Karelian. In addition to the scrutiny that the Big Four are receiving around the Karelian account, PwC is receiving a lot of scrutiny in particular over the Karelian bankruptcy in the UK. PwC has been charging about 2.5 million British pounds a week for the administration of the Karelian bankruptcy. And they were accused by government regulators of milking the Karelian cow dry because this company was already going under, and government agencies were trying to salvage what money was left so that they could provide money for employees with pensions. But PwC says they are experts at being liquidators and they need to be paid a hefty fee to be an administrator. PwC was previously accused of being a bad actor in this Karelian audit because they used to be the accountants for Karelian on some of their pension funds, and they made millions of dollars from that work, yet they could not spot that anything was wrong with the company. Karelian is a huge scandal in Europe right now, and as we said, it has many in Europe questioning whether the Big Four should be broken up. In other news, the foreign affiliates of the Big Four accounting firms were recently penalized by the SEC for auditing a public company in the United States without properly registering with the Public Company Accounting and Oversight Board. The PCAOB, as they are known, is the regulator of the Big Four accounting firms in the United States, and they audit the work of any accounting firm that audits public companies. And since the Big Four audit the large majority of public companies in the United States, you can understand how the PCAOB is their main regulator. And as a result of this foreign affiliate misstep, BDO Canada agreed to pay a $50,000 penalty. KPMG in South Africa agreed to pay a $100,000 penalty. Deloitte in Zimbabwe agreed to pay disgorgement and interest totaling about $100,000. And KPMG agreed to pay $141,000 in Zimbabwe. Another recent scandal, or I'd at least call it a scandal, is the gender pay gap numbers that have been coming out of the UK involving the Big Four. Most recently, PwC and KPMG have released their new gender pay gap numbers. And PwC reported a mean gender pay gap of 43.8% and a median pay gap of 18.7%. And this is the pay gap between what males are paid and females are paid. This is how much less the females are paid than males. And KPMG stated that they have a 42% mean pay gap and a 27% median pay gap. So these are extremely large pay gap numbers. And this is just another instance of some discrimination that's gone on in the Big Four. And not accusing the Big Four of being terrible places, but there's obviously discrimination going on. And, people are beginning to highlight that with all of the gender movements that are going on around the world and discrimination issues around the world. Each firm acknowledged that they have to work on trying to even the playing field for women in the workplace. And each of them tried to describe factors that contributed to this issue, but they admitted that the current pay gap was not satisfactory. There was other interesting news stories coming out of the Big Four, and one of the most interesting ones was Deloitte hiring spies. Deloitte hired a former UK spy to head up their Europe cyber intelligence practice. His name is Rob Wainwright, and he joined Deloitte from Europol, which is a EU intelligence agency similar to the CIA in the United States. And Rob has 28 years of experience working in MI5 in the UK, which is pretty much the same unit where James Bond worked. Well, I think James Bond actually came out of MI6, but it's pretty cool to think that Deloitte's hiring someone similar to James Bond. And this is a huge hire for Deloitte. They're obviously seeing the demand from their corporate clients around cyber intelligence as more and more of these online hacks happen. And the latest news is the manipulation of data from Facebook accounts. So obviously, there's companies like Facebook and other large corporations that would like to protect their private data and avoid huge headline risks from unknown technologies. And what this spells is it means more money for the Big Four accounting firms to earn from cyber intelligence. Deloitte plans to add an additional 500 people to its European cybersecurity practice alone. In other Deloitte news, Deloitte acquired a firm by the name of API Talent. API Talent is considered an advanced Amazon Web Services consulting partner. And this is no surprise as Deloitte continues to gobble up Amazon Web Service providers across the globe. And they seem to be the only firm actively working in this space as more and more clients move their data and information to the cloud. So this is something to keep in mind as you're recruiting and thinking about a career with the Big Four, is that this technology consulting is growing more and more. And this fits in with Deloitte's model of being a large consulting firm. Ernst & Young also had mergers and acquisition news as Sonoma Partners merged with Ernst & Young in early March. Sonoma Partners is a leading consulting firm that specializes in Microsoft Dynamics CRM and Salesforce CRM solutions. CRM stands for Client Relationship Management. And this transaction builds on E&Y's high-quality CRM offerings. And this will help E&Y build out their digital transformation offerings. And client relationship management is very important to companies with their marketing efforts. And as we said before on this podcast, marketing is becoming more and more a part of Big Four consulting. In other Ernst & Young news, Ernst & Young is planning on opening another Wave Space Center. And this time they are opening it in Charlotte, North Carolina. And they will add 375 jobs over the next 5 years to this Wave Space Center. And the Wave Space Centers focus on new technologies in accounting like artificial intelligence and data and analytics. E&Y will receive a $3.2 million tax incentive as part of the deal that will be spread over 12 years. And Ernst & Young is set to invest $8.2 million over the life of the project. And E&Y will pay an average of $75,000 per Wave Space job. And E&Y already has Wave Space Centers in New York, San Francisco, and Seattle. In other Big Four accounting firms' technology news, KPMG has decided to expand its Masters of Accounting with Data and Analytics program. As we have previously covered, KPMG has offered scholarships to students to get a master's in data and analytics with their accounting degree. In the last couple of years, they launched their pilot program at Ohio State and Villanova universities, but they have since expanded that to 9 universities in this latest news. And some of the universities are Arizona State University in the United States, Baylor University, University of Georgia, University of Mississippi, University of Missouri, University of Southern California, and Virginia Tech. And through this program, KPMG will offer 135 scholarships to qualified students. And the focus of the curriculum will be on technology solutions like data and analytics, robotics, natural language processing, predictive analysis, cognitive capabilities, and workflow automation. And we've spoken about many of these technologies on this podcast, so make sure to subscribe to learn more about these. And KPMG is fully aware that these technologies are the future of accounting, so that's why they're investing in developing these leaders today. One of the most interesting news stories in March of 2018 involving the Big Four is that PwC has begun utilizing blockchain to audit. So PwC has partnered with Northern Trust, which is a financial services firm, to begin auditing on the blockchain. Northern Trust developed a private blockchain for private equity transactions, and this blockchain specifically manages ownership shares. PwC was granted access by Northern Trust to the blockchain as a node, and they can see transactions happen in real time by participating as a node. We've actually suggested that this would happen in one of our previous blockchain articles. We suggested that the Big Four could not only audit via becoming a node on the blockchain, but they can also offer being a node on a blockchain as a service. And these private blockchains need multiple nodes to work. But who can these companies trust? Well, theoretically, you wouldn't trust anyone more than you trust your CPA, right? Well, that's at least what we think many large companies would see with the Big Four, and it appears to be happening slowly. And PwC will be able to see the data on this blockchain as read-only. This blockchain was developed using Linux Foundation Hyperledger Fabric. And this doesn't really surprise me much because private equity firms are the most active in developing unique blockchain solutions. And they have been using blockchains historically to track ownership, and that's what they're doing here. And this could be pretty risky depending on who you allow on your blockchain because these are important transactions that people can see. And we've spoken about this on other podcasts as well, but it would be interesting to see who else is on this blockchain and in future blockchains involving the Big Four as well. So what does it all mean? What does all of this news in March of 2018 mean for the Big Four and means for you as our listeners specifically? All of this news means it's an exciting time in the Big Four as they are investing heavily in technologies. We've seen Deloitte acquire Amazon and Salesforce consultancies, and we've seen PwC begin auditing blockchains. E&Y and KPMG are also investing heavily in tech jobs. E&Y is opening a new innovation center in Charlotte, North Carolina, and KPMG is providing scholarships for data and analytics accountants. So if you want to work for the Big Four, it is extremely apparent that you need to learn about these new technologies that the Big Four are using. But it is also important that we don't skim over the scandals. It is essential that these accounting scandals are highlighted and prevented in the future. And how can they be prevented? I think they can be prevented by new technologies, but I also think that Big Four partners need to be held accountable. And I'm not going after the Big Four accounting firms because I am bitter and I have an axe to grind. I'm criticizing certain parts of the Big Four accounting firms because the Big Four can be great places to work. But there are bad apples that work at the Big Four that jeopardize their very existence. If Big Four partners on large accounts are not held more accountable, then regulators, as we see in the UK, might ban them or they might break them up. And we've already seen this happen in countries like India, where they've been banned for a couple of years. Unfortunately, the Big Four aren't really holding their partners accountable right now. All they do is release materials saying that they are focusing on audit quality. But those materials don't seem to be making their way to leadership at the accounting firms. And it's not just accounting scandals either. It's gender pay gaps, as can be seen in the latest pay gap releases from PwC and KPMG. Top executives at the Big Four need to be held accountable across the board as it relates to scandals, discrimination, and equal pay. If you want to help our push to keep the Big Four accounting firms accountable Forward this podcast onto a friend or colleague and start raising awareness on the need for change and need for accountability from top professionals in the Big Four. For many of you, your future will take place at these firms. Make sure that they continue to be great places to work and start raising awareness today. Thanks for listening.
We appreciate your help in growing this podcast so we can continue to bring you the best Big Four content possible. You could help us out by providing a review on iTunes, sending us an email with your comments, and don't forget to share with your friends. There's a link below in the show notes. That's our show for today. Thanks for listening and have a great day.